Hello, this is Mel Thompson, and this is a podcast and a series of podcasts about political risk. Today I'll be talking about the Egyptian currency float and how it has an impact or a non impact in this particular case on the exports of agricultural goods. Now, the export of Egyptian agricultural products has increased and expanded to previously untapped foreign markets. This, in and of itself, would not be news except that this is on the heels of a currency float. Foreign direct investors who have business in Egypt and the agricultural markets have not been adversely impacted by the Egyptian currency float. This is also an indicator to those seeking to enter this market that its soundness, particularly at this time, is not dependent upon the float, so any plans can go forward. Once again, I want to stress the soundness of the market is not dependent at this time. At this time. Now, this course of events can be traced to the value of the Egyptian pound, which is now half of what it was previously. This halving of the value occurred when the Egyptian central bank did not maintain the 8.8 peg to the dollar. Since November, the cheaper currency has given imports a much cost-effective market to tap into. The agricultural products are now what is benefiting from this. The exports are booming because of this. It needs to be understood that even with this positive result, there is a $12 billion IMF loan that Egypt needed to be tied to the currency float. One of the purposes of the loan is to restore foreign inflows. Now, if you view the expanded agricultural exports in the light of the secured loan, one of its purposes you can see is that it's there to increase FDI opportunities, foreign direct investment opportunities, FDI opportunities. Egypt is an import-dependent nation and needs inflows of FDI in order to establish a robust export sector. This surge in agricultural products is the beginning. The political risks are still present in any market in Egypt, and the same ones exist now as they did last year before the float occurred and even the loan occurred. However, the terms of foreign direct investment are going to be more flexible because it is a plan now based upon a $12 million loan and no adverse impact because of this float that is directed at encouraging inflows. The Egyptians are not going to make it difficult for you to be a foreign direct investor. They're probably going to be less willing to protect their own people to a certain degree just to get your money in the country. Now is the time to look at Egypt as a serious foreign direct investment target in all sectors. Is this the time to do that? I would say yes. The expansion is not to be limited to agricultural exports if the inflow strategy is effective, which I believe it will be. The fact that such a strategy even exists is an indicator of a lower level of political risk. This has been Mel Thompson.